Did you notice how quickly gas prices went up last week? Recent reports show that there's less fuel available around the world, and this issue might get worse in the next few weeks and months because the demand for gas is higher than what's available. This is partly because of production cuts by OPEC and its partners. In the United States, people are now paying the most they've paid for a gallon of gas in at least 8 months. Experts in the gas industry say that in August, it might get even more expensive as some refineries are shutting down for maintenance, and gas supplies in some states are running low. So, from now on, when you fill up your gas tank, it's going to cost you more money. There are several reasons for this, which we'll explain in today's video. But before we dive into it, we'd like to ask you for a favor. Please give our video a thumbs up and subscribe to our channel so you won't miss out on what we have in store next. The calm period of low gas prices we've enjoyed for months has ended, and now we're facing a challenging situation. Just last week, gas prices shot up overnight, and unfortunately, it doesn't look like it's going to get better for American drivers in the weeks and months ahead. According to the American Automobile Association, on Saturday, the national average price for a gallon of regular gasoline reached $3.75. This was the biggest one-day increase in a year, and the highest price we've seen in about 8 months. Gas prices have gone up by 30 cents compared to June, but that's still a small increase when you consider that experts are predicting it could reach $5 per gallon by this fall. These changes are happening quite fast. Even the more fuel-efficient premium gas is now close to $4.50 per gallon, which is a 30-cent increase since June. In California, the average price is even higher at $4.95 for a gallon of regular gas. In some places like Mono County, right outside Yosemite National Park, gas prices have skyrocketed to a shocking $6.05 per gallon. The American Automobile Association, represented by Daniel Armbruster, has pointed out that gas prices are on track to reach levels we last saw during the peak of inflation in 2022. The problem here is that both local and international gas producers are reducing their production, while the demand for gas remains strong. This is causing the price of crude oil to go up, reducing the amount of gasoline available, and the summer travel season is also increasing the demand for fuel. All of these factors are pushing retail gas prices even higher, as highlighted by Daniel Armbruster. It's true that the main reason gas prices keep changing is because of oil prices. In July, the cost of 1 barrel of crude oil went up by 10%, reaching its highest point in 3 months last Thursday. This increase in the raw price of crude oil directly impacts the cost of gasoline and other refined products, adding around 24 cents per gallon, as explained by experts. And all signs are pointing to the start of a trend where gas prices will keep going up for a while. The reason for this is that there's not enough gasoline available due to production cuts made by OPEC and its partners, who are some of the world's biggest oil producers. This month, these countries decided to cut their oil production even more, after reducing it by 1.5 million barrels per day in May. On top of that, sanctions on major oil exporting countries like Iran, Venezuela, and Russia have also made the global supply of crude oil scarcer. This scarcity has caused oil prices to rise, as mentioned in a recent report by Natasha Kaneva, who is the head of global commodity strategy at JP Morgan. Last week, AAA analyst Robert Sinclair shared that because of OPEC's decisions, the world has been losing nearly 4 million barrels of oil per day this year. To put it in perspective, that's about 4% of the total daily production of crude oil. This 4% reduction in daily output has led to higher prices for both crude oil and gasoline, even though the demand for gas during the summer in the United States hasn't been extremely high, as Sinclair explained. Saudi Arabia recently announced that they are willing to further reduce their oil production to achieve a target price of $100 per barrel of crude oil. In the coming month, they plan to cut output by an additional 1 million barrels per day. This is the most significant reduction from the kingdom in years, and is expected to keep oil supplies limited until 2024. The goal behind this move is to increase oil prices, and Saudi Arabia, along with other oil-producing countries, is striving to regain its dominant position in the global oil market. OPEC+, which is a group of oil-producing nations, is responsible for about 40% of the world's crude oil production. This means that their decisions on oil production can greatly affect the prices of fuel in our own country. As Robert Sinclair pointed out, it seems that the production cuts are now having a direct impact on the availability of oil. Additionally, our exports are also playing a role in reducing the supply of oil at home. We are exporting about twice as much gasoline as we are importing, mainly from the Gulf Coast. This is because Latin America relies on us as their primary supplier, and they aren't expecting any new refineries to come online this year. Since late June, global oil prices have increased by more than 16%, making this the longest continuous increase since the period before the conflict between Russia and Ukraine disrupted the energy markets. The price of Brent crude, which is the global standard, reached $84 per barrel last Friday, marking a 3.9% increase in the past week. Brent crude futures have risen by about 11% in the last month, reaching $82.33 per barrel. This winning streak is the longest since we saw an 8-week rally end in early February 2022. Over the past month, U.S. West Texas Intermediate crude oil has surged by almost 13% to reach $79.56. U.S. oil prices are also on track for another 4% increase this week, marking their longest continuous rise since April 2022. According to the International Energy Agency, global oil demand is expected to go up by 2.2 million barrels per day, reaching a record-breaking 102 million barrels this year. This means the world is facing a significant gap in supply, with a shortage of 1.8 million barrels per day or even more. This imbalance between supply and demand is going to have a serious impact on U.S. drivers. To make matters more complicated, rising temperatures are also playing a role in driving up gas prices. There are two main reasons for how high temperatures contribute to increased gas prices. First, when people use air conditioning to cool down, it raises demand for energy, pushing up prices. Second, the extreme heat can lead many oil refineries to reduce production for safety reasons, which in turn decreases inventories and causes prices to rise. This combination is causing a lot of frustration for Americans who are hoping for lower gas prices. Currently, refinery utilization, which measures how much crude oil refineries are processing, is down. AAA analysts attribute this to the excessive heat affecting 2/3 of the U.S. across 24 states this month. They also noted that a major refinery in New Jersey recently went offline. The Bayway refinery, owned by Phillips 66, can produce up to 150,000 barrels of oil per day, making it the largest gasoline-producing unit in the Western Hemisphere. However, it had been operating at reduced capacity for most of June and July due to unplanned repairs, as reported by Reuters. It was supposed to be back at full capacity by now, but that hasn't happened as planned. Oil supplies within the country are also facing limitations, as mentioned by Andy Gross, the national spokesperson for AAA. If oil prices remain high in the coming weeks and months, they could impact upcoming inflation reports. Gross pointed out that prices could also be influenced as we enter the peak hurricane season in the United States. According to the National Hurricane Center, most storm activity occurs from mid-August through mid-October. Depending on the path of these storms, domestic oil production could be disrupted as offshore and Gulf Coast oil facilities shut down. We are heading into a risky period, Gross cautioned. The big unknown is the possibility of a hurricane hitting the oil infrastructure along the Gulf Coast. Such an event could cause prices to skyrocket overnight, he noted. Given that water temperatures around Florida are reaching 100 degrees, the chances of a major storm forming are higher. Patrick DeHaan, the head of petroleum analysis at Gas Buddy, a platform that helps people find affordable gas, added that if refineries in your area are operating at lower or decreasing utilization rates, you're more likely to see gas prices go up. Tom Closer, who serves as the global head of energy analysis at Oil Price Information Service, revealed that refiners in Texas, Louisiana, Tennessee, and some other states are already struggling to operate anywhere near their maximum capacities. He emphasized that when the outside temperatures approach the 100-degree mark, it becomes challenging to maintain maximum production levels. Refinery usage across the nation fell by 0.9 percentage points compared to the previous week, now standing at 93.6%. gasoline production dropped to 9.5 million barrels per day, and distillate fuel production decreased to 4.8 million barrels per day last week. The West Coast saw the most significant decline at 2.4%, reaching 90.9% utilization, followed by the Gulf Coast with a 1.5% decrease to 93.3%, and the Midwest slid by 1.1% to 97.7%, according to oil price data. These percentages indicate how much of a region's total capacity was used for oil refining, as explained by Dehan. It's essential to keep an eye on these percentages because lower utilization directly impacts local gasoline prices. In the coming weeks, experts suggest that Americans might see another increase of around 25 cents in gas prices. As we approach winter, the situation could become even more chaotic as supply systems become more vulnerable, as seen in the past. We're not adequately prepared for emergencies or supply disruptions, and we may be just one extreme weather event away from experiencing widespread gas station outages again. At this point, we can only hope for the best but must also prepare for the worst, as this oil crisis is shaping up to be one of the most severe in recent history, with potentially catastrophic consequences.